Okay, here we go. As I had mentioned, my name is Ron Williford. I've spent over 30 years as a financial consultant slash planner. Also, I do some business planning with businesses with their taxes. I'm here today to talk about some tips that you might be able to use when you're preparing your taxes, and also to explain to you some of the things and the mechanisms of how the tax system actually works. So give me a quick second. I'm going to share my screen and just feel free that if you have any questions, drop them in the chat. Or if you raise your hand, I'll try to acknowledge you and try to answer that question at that particular time. So here we go. So I'm going to talk to you about some of the things that I do. It's not going to be a long presentation because I want to address some of your questions as well. I think that's the best way that I can get this information to you. So I'm going to talk about one of the presentations that I do is tax planning for small businesses. And the first thing is managing your tax obligations. The most important thing, there are three things: get informed, plan, and then also have the ability to save to pay your taxes. What I've seen in my career is that a lot of us will start businesses and we forget about Uncle Sam. And then when it's time to do your taxes, you got a big tax bill. So what I always recommend is that as you go along the way, put aside 20, 25% of whatever you're earning so that you can pay the tax person. Because if you're running a business, you want to make sure that you at least have a profit. So your motive should be to make a profit as opposed to not paying taxes. Primary business taxes are your income tax, your self-employment tax, state employment taxes, income taxes, employment taxes, sales taxes, and local taxes. Depending on the type of business that you have and depending on the products that you're selling, all these taxes or some of them will come into play. And then know your obligation, know the form of business will help you determine how to pay your taxes, where to pay your taxes, and when to pay your taxes. I think everyone on the call is either a sole proprietor, single member LLC, and that's what I'm going to particularly address. If there are any questions regarding an S corp or some of the other forms of corporation, I'm glad to address those as well. So to understand how taxes work, the first thing you need to know is how money flows. If you're an employee, you get paid, and before you bring your paycheck home, you're going to have your taxes deducted. Any deductions come off the top, then you have your net income. As a self-employed person or as a business owner or even as an investor, you get paid first, pay your expenses, and then we have what's called your net income. Your net income is what you calculate as your tax bill. So if you made 10,000 and you have 5,000 in write-offs or expenses, then your net income is going to be $5,000, and that's what Uncle Sam expects you to pay relative to paying your tax bill. So I'll just briefly go over the types of businesses. You have a sole proprietorship, limited liability company, S corp, C corp, and then a nonprofit organization. As a sole proprietor, it's just you, no other business relationships. You can have an LLC, and an LLC is just a limited liability company. And that what that does, that protects you legally. Now, as an LLC, you can still be taxed as a sole proprietor, or you can set and recognize yourself as an S corp, which I'll explain a little bit later, the differences between an S corp and a sole proprietorship. A sole proprietorship, it's what's called a pass-through entity. So you have your income minus expenses, and this is all going to be reported on your Form 1040, your regular tax form. If you have a partnership, which is you and several other folks, the form that you file, it's called a 1065. And then each partner would get what's called a Schedule K to report on their individual tax return. With an S corp, same thing. You have your profits and your losses, And then you have to actually report a business form. It's called 1120S for subchapter to the IRS. Then any profits or losses is then carried to your individual tax return. Then you have a regular corporation, and I explained what a limited liability company is. It's just a way that you can protect yourself legally. So if someone sues you, it doesn't impact your own personal um, finances. So they can only sue the business. Then it's also, I had mentioned, it's always important that you keep separate accounts from your personal account if you're running a business. Now, many of us have LLC set up. And if you don't have a separate account for your LLC, if someone sues you, and if you're keeping it in your personal account, they can actually take your personal possessions because you're not acting the way an LLC should. So make sure you have separate accounts. Make sure that, each quarter you take a look at what your profits are. And I'd recommend putting away 20, 25% of whatever you made to save to pay your tax bill. Because you always have to recognize that as a self-employed person or business owner, you don't have anybody that's taking out withholding taxes. So at some point you have to pay. You can pay quarterly. Every quarter you pay a certain amount so that when you do your taxes, you've accounted for what you owe to the tax man. Here are some common expenses and deductions. You have your office expense. You can deduct advertising, the business miles. If you go from your office to an appointment, you can deduct that. You can deduct meals. But what the IRS is saying now, that if you have a meal, you should have whoever you're meeting with sign off on the receipt so that it makes it an official business meeting. You can deduct travel expenses and you can deduct supplies. I'll go into a little more detail about the office expense. There's two different ways you can do that. This is just a sheet that I use to help my clients. If you can see at the top, you've got your income. Typically, you're going to get gross receipts, 1099. It's going to show all the income you made. Beginning this year, if you use Cash App or some of the other apps, you're actually going to get a 1099 from Cash App or Venmo, one of those organizations. And if you have the money going into a business account, you'll be taxed as a business. If it's a personal account, then you don't have much to worry about. Then here's some of the expenses, as I mentioned, your vehicle mileage, legal expenses, office expenses, just a variety of things. And what I actually have my clients do is they do this worksheet, and then that way I can verify that they are claiming those expenses. Then you ask, what can you deduct? You can deduct if you're using your home office, your real estate taxes. You can depreciate. If, let's say, you bought a computer, you can depreciate that computer over the course of a certain amount of years. You can deduct utilities, repairs, rent, mortgage interest, if you have a home office business. Now, the way the rule works, most people will ask me, well, how does the home office work? Probably the easiest way is that they have a simplified version. You can take up to 300 square feet of your house, and it's $5 per square feet. So if you have an office and you blocked off 100 square feet, multiply the 100 square feet by 5, and then that's the deduction that you'll have. It's simplified. Or there's a long version where you take all your expenses, and then there's a certain percentage that you can deduct from your actual expenses. What I've seen is probably the easiest way is just to do the simplified version, and it's not as complex. And then all that information, your net income is then carried to a Schedule C, and then from a Schedule C it goes to your 1040, and then you report that as income. Here's just a copy of the Schedule C. So If you prepare your taxes or whoever prepares it, this is what the form looks like that needs to be a part of your tax return. So if someone ever asks you, well, where's your business return? It's on your Schedule C. And a lot of people think you have to do an additional form. But if you're self-employed or if you have your own home office business, the Schedule C is where all that information is listed. And then from the Schedule C, then it's carried over to your 1040 on line 8. It goes right there. And then it's calculated with your wages and interest and any other income that you're going to report. And then you have what's called your taxable income. And just a couple of important things before I take some questions. This is a letter you should have or will be receiving from the IRS regarding the stimulus checks. If you didn't get a stimulus check, this is where you're going to get it back. If you file your taxes, you're going to get a credit to your tax return. And the letter should look like this. I just so happened I was on a session with the IRS about a week ago, went over all this stuff. So, look out for this letter. Make sure that you have the right numbers, because if they aren't correct, it could delay your tax return. Then also another important letter is letter 6419. That's if you claim the advanced tax credit. It's going to tell you the number that you claimed. I think the credits are up to a certain amount of money. If you already claimed some of the advance money, it's going to actually reduce your tax return. A lot of folks took the credit and then now they're doing the taxes and wonder why they got less than they may have gotten in previous years. That's because they took the advanced child tax credit. And then some of the things that when you're moving from an employee to a business person, you look at your profits and loss, you look at various things. I mean, you got to actually change your mindset of how you do things. Money comes in, just make sure that, you're preparing yourself for Uncle Sam. Like as I've been saying through the whole conversation, put 20-25% of your earnings away just to pay the tax bill. And that way you're prepared and there won't be any surprises. And then some of the other issues, the 1099. If you're paying anyone as a subcontractor or someone that's working with you, if you pay them over $600, you should be giving them a 1099. Also, as independent contractors, if you're using Cash App, as I mentioned, or some of the other applications for people to pay you, you'll be getting a 1099 as well. I mean, it's good to the point where you'll have a record of the income you made. It's bad because now you got another thing that you have to worry about, that you can make sure that you're reporting your income in the proper way. And then some of the common mistakes is some folks feel that they owe, so they won't file right away. Self-employment tax is a big one. As a self-employed person, you're paying self-employment tax, and that's a big number. And then at some point, depending on the amount of money that you're making, you may want to just reclassify your business. And usually, when you start making around 6 figures, you might want to start recognize your business as an S corp. So then that way you avoid the self-employment tax. And each situation is different. So I just recommend that you have a consultation to determine what's the best way to conduct business. And then some of the other common mistakes, and this is directly from the IRS, this slide, poor record keeping. Always emphasize, make sure you have the right record keeping. A lot of us, there's a lot of applications that you can download to your phone. For my business miles, I use an app that's called Mile IQ, and it tracks every time I move in my car. And the biggest thing is the IRS looks at your business miles. That's one of the red flags. If they see a lot of business miles, that's a red flag, and they might call your number, to come in and have a little chat. So be aware of that, and just make sure you have great records. Just keep records of everything. And that's it. That's all I have to present. And I just want to entertain some questions if there are any questions.
Well, I don't want to be, go ahead. I'm sorry. No, you go ahead. You're the guest. I'm a
Right,
host.
ma'am. Hey, Ron, I just had a question. You mentioned about that self-employed tax.
Right.
Can you go over that real quick again, Basie, or is that something I can look up in my IRS book or
Well, you do
or
that when you're
something?
self-employed. What the
Because,
IRS looks at, there's what's called a self-employment tax.
Mm.
And a lot of times when you file your tax, you say, wow, I owe all this. And typically it's because of that self-employment tax.
oh, that's why. Okay.
Yeah. Sometimes you may not withhold enough, but that's a deal killer. What I typically tell folks is that if you're creeping up to like 100,000, you might want to consider, you can still be an LLC, but you can ask the IRS to recognize you as an S corp.
Okay. Yep, not near that 100,000 yet, so I probably don't have to worry about that one. That's something that Pam is doing probably.
Okay. Speak it into existence. Yes.
There you go.
Well, see me, I think that way. I look,
Yeah. Yeah.
if I'm making $1, it's 100,000 to me. So I
Okay.
always plan and prepare
You're
myself
winning.
for that.
Okay. Before I ask my question, I want to give our guests opportunity. Is there other questions, or I was trying to see in the chat and I knocked my phone down if there's any questions in the chat. But in the meanwhile, I want to talk about, or I have a question. I kind of went over it with you, Ron, but I think it's important that we understand, during this time, we all experience unexpected things out of our control. One of the things that I experienced, and it costs me, I'm going to use it as my tax. I just want to make sure I file it correctly. We had issues with our shipping. I was traveling. I like to travel, and I still work. I had some things that no fault of the company, but because we got caught up in this political, post office things, there were people that weren't getting the products. And because I'm trying to build a business where I was located, I made, good and taking my own other products, handing them out free. Where should I file that? Is that considered a loss, or what do we do with that? How would I position that under my list of things, how to file or how to list them?
Well, what I'd
So
recommend,
losses like that.
yeah, I'd recommend you bought it for the purpose of selling. So it'd be considered supplies or cost of goods and services. You can't write your expense. If that person didn't deliver, you still spent the money, so it's a part of your supplies.
Okay.
Also, if you're I usually do this business retail. So what I do, I have a business account and I purchase when I want to sell retail from my business account. So that's the cost of my goods and services. As opposed to anything I buy personal, I use my own personal account. So then that way to the IRS, it looks like, okay, you bought this from your business account. It's a cost to the business. So it's either supplies or cost of goods and services, and they all change your bottom line.
Because what I'm trying to do, because when I get ready to enter this line item, it was like a sample. I knew I would have that, but I didn't know that I was going to have to resample again. So that person's going to get 2 sleeves of samples instead of the 1 sleeve of sample. And I can say that and not worry about being audited and challenged on that.
No, I
So
mean,
I can know.
you can also look at it as, if you're giving away samples, you could either, because we have the little button you can hit now that samples, that sends someone a sample. So if you
Right.
use that button, then that's considered cost of goods and services. Or you can also categorize it as advertising. It's a
Mhm.
giveaway. You know, you're
That's
doing
what I wanted to
marketing,
find out. Okay.
advertising, marketing. If you're giving away, you know, a couple patches, you know, figure out a monetary value, and I would consider that to be advertising.
Mm-hmm. Okay. Okay. And
You know, you may
think
have
I,
set up at a flea market and you got samples for people to use. You may
Mhm.
have it on in a little fancy, whatever container. So now we consider that advertising.
okay.
Yeah.
All right. Good to know. Anyone else have any question?
Gotta hit you up again, Russ,
I,
whenever she,
Yes. Next, Carla.
okay. I have a question. Now, I sell a lot of product hand to hand.
Okay.
So I purchase, the stuff and then I gotta give it, I sell it right locally. How do I work that? Is that cost of goods and then put how much I make? Where does that go?
It could be one of two things. It could be cost of goods and services, or it could be supplies. I mean, but if you're actually selling them, then I would consider it as being the cost of goods and services. So if you're spending let's say $100 for the patches, and then you then sell them, the $100 is your cost. And then if let's say you're selling them and you're selling them that same batch for 150, then your income's 150. So then your net profit would be $50.
Okay.
And I would just, like I said, I would just,
And that,
go ahead.
oh, I was gonna say, I do my own taxes and I do an H&R Block thing. So now if I put that in one of those lines, it'll automatically subtract that and say, well, I made $50 profit.
Right. Yeah. Yeah. I mean,
Oh, it'll automatically do it.
yeah, if you, and what I would do is anything you spent to give away, that's going to be an expense. And then anything that
Right.
you
Right.
sold,
Yeah, I understand that.
right. Yeah. Yeah. It should automatically calculate it.
I have a question.
all
Well,
right.
go ahead.
I have a question also. Can you hear me?
Yes.
Hi, thank you, Ron, for this presentation. Also, wanted to ask, when it comes to business expenses, like some of us haven't even made a certain amount. I know you don't even get a form in the mail or whatever unless you've made over $600. And I know also, like, if it's been a couple of years in a row and you still haven't made over that certain amount, is there a point where IRS will come and look for you if you, like maybe 3 years in a row, you can take what am I trying to say? Like, you didn't make any money, but you can still say I had expenses, right?
Yeah. Yeah.
Is that
whatever.
correct?
Yeah. But the only thing is with the IRS is that they look at like 3 years, you didn't make any money. They'll say,
Mhm.
okay, this isn't a business, this is a hobby.
Okay.
So they're not, you just have to be careful of that.
Okay. And the other thing I want to say is if you have expenses because you're taking classes maybe on how to build a website or whatever, if you don't make if your expenses don't reach a certain amount, should you just take the standard deduction for expenses?
Yeah, I mean, it depends because a loss can always reduce your taxable income. I mean, the standard
Okay.
deductions now, if you're single, is 12,000 and some change. If you're married, it's 25,000. And if you're head of household, it's like 18,000. I don't know. I don't have the numbers exact,
Mhm.
but if the goal is to reduce your taxable income, if the business can reduce your taxable income with the loss, then yeah, report the loss.
Okay.
But just be careful that, if you continue to show losses, you might get that knock on the door, so just be careful of that.
Okay. All right. Thank you very much. And thanks for the presentation.
Oh, you're welcome.
Cynthia, or I'm sorry. Go ahead.
okay, Cynthia was up there before me.
I don't know, Cynthia. Cynthia, did you still
Oh.
have a question?
Hello,
Okay, go-
hello, hello. Thanks
Mm.
so much, Ron, can y'all hear me okay?
Yes.
We can
yes.
hear you.
Okay, thank you so much for that presentation. I tell you, the tax advantages of a home-based business has always been so near and dear to my heart. And you guys, don't overthink it. Bottom line is, let's be real. If you're doing what you are supposed to do, meaning attempting to make a profit in a business costs. It costs. You should have, real expenses. And so that's what the IRS is recognizing. And so, and even if you do all the right things and you get a notice that you're going to be audited, don't feel like you did something wrong. If you're doing what you're supposed to be doing and you get audited, you just prove it. You keep your receipts, you keep, good records as much as you can, and you go from there. And so, don't get caught up in the red tape, meaning, it's just such a good thing to be a business owner with the tax advantages of a home-based business, especially when you're talking about a home-based business. I'm a traditional business owner as well, and man, the expenses are just unbelievable. Sometimes you have to scratch your head and say, man, is it even worth it?
Really.
And so to have an opportunity to, make money like we do from a home-based business and don't have to incur all the big expenses, that is really, really, really a good thing. And there's just so many tools out there that you can use to get organized, to track your expenses, to track your mileage, and you just, keep your receipts. And then at the end of the year, when it's time for you to get ready to do your taxes and everything, you have all your receipts, you have everything. And the beautiful thing I love about the patches is that our patches can serve as a asset, meaning something that you use to make profit, cost of goods sold. And it can also serve as an expense. That's huge because, when you're buying liquids and powders and potions, it's kind of hard to do that, to sample, liquid. It's hard to sample. So you have to, a lot of times, buy, like if the company has a little small sample of it or something, they'll have additional, products that you can buy to sample out. We don't have that. And so you can very well buy, what you need to buy as far as patches, and then break it up. And then 50% was a sample. So it was an expense, and 50% you made money off of, and so we got so many ways that we can really take advantage of, tax breaks and so forth like that. And so don't.
Okay, I think we lost.
Reach up and everything. Huh? You lost me?
Yeah, you have a bad connection.
Okay, well, I
Uh,
pretty much said what I needed to say. Okay.
Thank you for that. Eugene, what is your question?
He's not here anymore.
Oh my goodness, I'm so sorry. Well, Eugene left. Do anyone else have a question? That's a tax related question? No? Okay. Ron, do you have a closing remark?
I think my closing remark is just make sure.
I have one more,
Oh. Go ahead,
I
Carla.
was gonna say, I have one more question. Okay, I purchased a vehicle to use as my business. And we have other vehicles we drive. So how do I just expense it out or do the fuel or do the mileage part on it?
Well, you have two ways you can do it. You have the standard deduction, which is your mileage, or you can do actual expenses. Also, if you bought the vehicle just for business, you can actually depreciate the vehicle.
Okay, that's the word I was trying to come up with earlier. Okay, okay,
And then if you depreciate it, then you have to do actual expenses. Also, if you lease the
Okay.
vehicle, you got to do actual expenses. You can't do the standard mileage.
okay. Okay, that helps.
And then if you
I
wrap the car
appreciate
and
that.
make it segregated as from the other vehicle. And then,
Oh,
just keep
yeah.
records. I mean, it could get pretty deep, but basically, you decide if you purchase the vehicle, you decide standard miles. And what you want to do is at the end of the year, look at the standard miles, if that's better for you. If it's a new vehicle, you probably don't have a lot of actual expenses except gas, oil changes. So the standard miles may
Yeah.
be
Yeah.
more of a benefit for you.
Oh, okay, yeah. I'll do it both ways
And
and see
then,
which
no, look
way
at
helps
depreciation as
best.
well. I mean, you can write off 100% of the purchase in the first year and then spread it over, X amount of years. Take a little bit at a time.
Okay, with that depreciation, I still could take the mileage, or do I have to do the?
You gotta do
Actual
actual
cost of-
expenses if you
oh.
do depreciation.
Okay, if I do the depreciation, okay,
Right.
okay.
Okay. Well, thank you
was
for that
all I had.
question, caller. Well, thank you for those question, caller. Those are very informative, and I know we can all benefit from these questions. That's why it's always good to bring them up, because sometimes people bring things up that you like, oh my goodness, I forgot to ask that. I was hoping to hear from Eugene. So I'm not sure who he is, if he's on someone's team, if someone knows him. If you can just reach out to him, let him know that we are interested in his question and we still want to address it. So let him know that he can inbox me or Ron, and we'll make sure we address that question. So at this time, we're going to ask, last time, is there any tax related?
Stella has a question.
Oh, Stella, go ahead. Okay.
Yes, thank you, Ron, for hosting us
You're welcome.
today. My question is, if you rent a car like for the weekend for, purposely to tailor patches or go out with your business, how do you expense that? Do you write it off as a business expense, such as, on what category? I guess that's what my question is.
It would be, as there's a section on the Schedule C for rent. And on there, that's where it would go. It's rent
Oh.
machinery or rent other, and it would go there. And what I always tell folks is that, because you rented it, you're doing the business, maybe you write off 50% of the cost, because some of it could be considered personal as well. And also if you're buying an airline ticket somewhere.
That
I
was
just-
my question.
Yeah, I just always recommend, the place, they just write off the cost to get there.
The
then if
total
you-
cost.
The cost to get to the destination. And then, the way the IRS is working now, if you meet with someone, they want to see a receipt. So, you have all these write-offs. I always recommend, take a portion. Don't go overboard, because there's like a bell-shaped curve. Sometimes if you take too much off your income, you miss some of the credits that are available for reporting the income. You can be a single person and still get the earned income credit. So if you zero out, there's a point where if you reported some of that income, you may have got credits and gotten a return, as opposed to writing off all your income. There's certain credits that you will miss it depends on your dependents. If you have dependents, you could qualify for the earned income credit. You could qualify for the child care credit and all those other deductions. So sometimes it's wise not to take everything off the table. Show some income and take advantage of the credits, and then, you might get a refund.
Thank you.
You're welcome.
And let me just add real quick, can y'all hear me?
Yes.
Yeah.
when you're going to a company convention, then, you know, if it makes sense to do so, you can write off that whole thing because you're there strictly for business. You bought the plane ticket, the registration, the hotel, everything, you know, for that business, you know, so I keep everything. I even keep my little badge, you know, that they give you to wear around your neck and everything, just in case you're audited, you know, and so you definitely can write that whole thing off. I believe what Ron was referring to, like if you're going, you know, someplace, you know, that is not just deemed for business, meaning to visit family or even a vacation or something, it's just best to write off 50% of it, which is better than none.
But yeah, my daughter's in LA, whenever I go see any of my daughters, I write off the front end of the ticket because they all clients.
Mhm.
And I write
Ron,
off.
when will it be required to have those signed receipts? Because I've already have receipts.
Probably
and I
right
didn't know-
now, right
Damn.
now.
So we won't be able to use those then, huh?
Well, I mean, if you use your discretion, you know, usually the IRS if something's, you know, excessive, you know, they'll call you in. But I mean, it's
Yeah.
just a matter of getting to the habit of keeping records.
Mm-hmm.
And I mean, there's so many automated ways to keep records that, you know.
Yeah, I
it
didn't know
makes it a little
about
bit
having
easier.
the customer sign it. That's new to me.
Well, yeah, that's something new,
Yeah,
as well as the 1099s
yeah.
from Cash App and some of the other places.
I'm in, boy. When did
Yeah.
they lay these new rules out?
Last year for this year.
Wow.
Yeah.
Okay.
They want to know where the money is.
Yeah, exactly.
Show me the
Jeez.
money.
Exactly. My goodness. Okay. Well, are there any more questions while we have Ron at our disposal before we close up this Zoom? And as you know, we are recording. So there are some questions there, Ron, for example, getting a copy of that list and things like that. So if you get a chance, check out the chats and then see, you know, if there's something I can do to help, let me know.
Yeah, I can probably put
to
it
assist
into
the
the group.
group
Yeah,
thing.
I'll try to get
Right.
it. I'll either take a picture and download it, or I'll put the actual.
Just put it in a
format.
text group or something, or send it to me and I'll get it out too. So
Yeah.
however works, whatever's best.
Any other questions?
Also, yeah, I was gonna say also if you could make a link to that, maybe put it, because if you put this up on your YouTube page, I would definitely watch it again. Maybe I can click on the link for your sheet on your YouTube page.
Okay.
Oh, yeah. That'd be
Okay, thank
great.
you. Thank you.
Definitely. Any other
Mhm.
questions? But I'd like to thank you for joining me this afternoon, and hopefully some of the information I gave you can be helpful. I'm on
Yes.
most of the chat stuff with Innovative. Feel free to reach out to me that way. I'm on LinkedIn. I'm on all the social media outlets. So feel free to reach out to me, and I'll be glad to answer any of your questions. Thanks for the opportunity, and thanks for joining us today. And I will make
right.
the recording available in some capacity or another.
All right. Well, thank you. Appreciate you so much, Ron.
Oh, you're welcome.
Again, thanks.
Thank-
Thank you everyone for joining and making this such a great Zoom. Have a great night.
All
Good
right.
night. Happy
care.
Friday.
Have a good
Bye.
weekend.
Thank you.
You're welcome.
Bye.
This afternoon on the East Coast, Pam.
Oh, okay.